Welcome to the Dividend Talk podcast, episode number 18. Our thoughts on Walgreens and Johnson Johnson's earnings. Hey guys, welcome back to another episode of Dividend Talk. I'm your co-host, Engineer My Freedom, and today I'm joined with European DGI. This is a podcast where we discuss our passion for dividend growth investing with our own unique European flavour. If you're new to our channel, please hit the like and subscribe to us. And check out our previous episodes on YouTube and Spotify and all your other favourite platforms. See you on the inside. Hey, what's going on, EDJ? How are you?
I'm doing pretty well. I mean, COVID-19 strikes back. I think it's we're watching now episode 2. What's going on in Europe? It's amazing, right? COVID-19 is spiking again, and I saw different countries lockdowns being proposed again, restaurants being closed. So yeah, well, the virus is back again. It was never gone, of course, but now it's hitting the numbers again and getting people sick. Sad thing, but no surprise. How about you? How are you doing?
Yeah, exact same. I'm sick of COVID-19 right now. We're in level 3 lockdown in Ireland at the moment. Some parts are in level 4, which has various restrictions, but they're talking about a complete lockdown for another 6 weeks coming up. So, oh man, I'm over it. I just wanted to go away already, but I think we're in for a very, very long winter. But let's just ignore that for now. I'm sure we'll be talking about COVID in plenty of our earnings reports and all the rest of it. So is there anything else, maybe of a more positive note that kind of sparked your interest?
Yeah, well, positive not maybe, but if we look at the news of the week, right? People might have been wondering yesterday, so hey, why did Danone drop with 3%? Yeah, and everyone knows that Danone is one of those stocks that I find a pretty nice deal this year. But the fun fact is that Mexico started to ban several global brands with their dairy products by not considering them living up to the 100% milk claims or something like that. So actually, the yogurt from Danone there is being banned at the moment because they were identified as having additional sugars and not meet the minimum requirement of how much milk there should be in the yogurts. So I'm sure that this pushes Danone to upgrade their content there in the product. And I think it just created a nice buying opportunity. It's interesting to see that I would not expect this from a country like Mexico, maybe because I just don't know it well enough. But it's interesting to see that they have such strong policies about the ingredients of milk, as an example. And I would actually love more countries to see doing that. I believe that Danone tries with many of their products to give a healthy choice, but it seems to not all yet, and Mexico intervened there. So it was nice to see. I think that if it is a 3% drop, that's more than the whole contribution of Mexico to the earnings. So I think that's a buying opportunity again, then presented on such a nice day. I've got an option outstanding, a put option on €52 with an expiration date in November. So yeah, interested to see if this drops further after the earnings next week. But consider me a buyer then.
Pretty cool. That's no surprise that you'll be buying Danone, but next week should be interesting, all right.
Mm-hmm.
But
how about yourself?
Yeah, for me, this is kind of from last week. I know we forgot this segment last week, so I'm kind of reusing old news, so to speak. But what kind of sparked my interest was IBM are splitting their company, which I think is quite positive, to be honest with you. They have two companies, one of which is IBM, and the second one hasn't got a name. They're calling it Newco at the moment, but they're basically splitting it. IBM will take over the hybrid cloud platform, will look after their digital transformations and their technology, and then this new company called Newco will look after the IT infrastructure. So again, it kind of makes sense when we were looking at them before. I know we analysed them, and and we were wondering what the new CEO was actually going to do. So now we're kind of getting an idea of the direction that they're going towards. So certainly interesting. And again, another one whose earnings that I'm interested in, particularly with Red Hat. So I'm excited. I'm more bullish on them now. I know they've had some tough times. So this is certainly for me a step in the right direction. So we'll see. This month is going to be interesting with all the earnings reports, isn't it? It's going to be fun for us. And speaking of earning reports, we've officially declared the 22nd of October Dividend Day. And I know you're excited about this, and I am as well, but we're planning on having a live podcast. We don't know if we're going to record this or not, but we just want people to join and have a chat with us, and we're going to reflect on the earnings of a couple of stocks. There's a load of stocks next week on Wednesday and Thursday, but particularly you've got Unilever, you've got AT&T, Coca-Cola, you've got Intel, who will be live when we are actually recording, so we can actually look at those live and give our thoughts. So I'm excited about that. What about you? I know you are.
Yeah, me too. I love talking about stocks. I also love really talking with you about stocks and looking into the earnings. And yeah, I think this is really interesting. 22 October is probably the nicest day for dividend investors. So hence Dividend Day. If you're listening, and I know, for instance, Phil might be interested, and maybe some of the others, just join us. We aim to do this around 10:30 p.m. in the evening. CET time. So I think it's 9:30 in Ireland at that moment in time. So we try to do it around 9:30 Ireland, 10:30 the rest of proper Europe. No, I'm kidding. So if you want to join, just ping us on Twitter. We'll make sure you get an invite, and then we'll just talk dividends that evening. I'm looking forward to it.
I hope loads of Irish come on now and we can revisit that comment.
Challenge accepted. Okay, so but hey, talking about earnings, this week was kind of a warm-up week for earnings. I think there were really two interesting companies that shared their earnings, and one in particular, because you're kind of the WBA guy, Walgreens guy on Twitter. So I would really love to hear your reflection on the earnings from this week, and what it means for your own hypothesis around Walgreens.
Yeah, I mean, I was fairly happy with their earnings this week, and I'll just give some figures just to lead in. So their sales actually increased 2% from the financial year 2019, which, given the impact that COVID had, and I discussed in my blog, was quite impressive. I actually expected them to go down a little bit. Their earnings per share was down 20% from last year. The estimated COVID impact on that was $1.06. So, I mean, again, pretty impressive. I was expecting earnings to be down at least maybe 30 to 40%. Their operating cash flow was 5.5 billion, and their free cash flow was 4.1 billion, which is up slightly actually from last year as well. Looking forward, they're a little bit optimistic, so that they are predicting a low single-digit constant currency growth. They're expecting maybe the first half of the year to be quite tough, which I also expect, but they're expecting high growth then in the second half of the year, maybe 20 to 30%. I'm not so sure. I think that's a little bit more optimistic, given the current situation now. We're going back into lockdowns, and we just don't know how long this is going to go on for. So I think that's a little bit optimistic. I would imagine it'll be in the maybe in the lower end, or even negative growth next year. I'm not too sure. But I'll just go into a little bit about their segments, just breaking down by segments. The retail pharma, so the Walgreens section in the US, their sales was up 3% year on year. Or if you look based on quarter 4 2019 and quarter 4 this year, it was up 3.6%. So you can see that the sales were starting to grow coming out of the back end of COVID. That's due to improved prescriptions. They've started testing for COVID. So I think they've tested over 1 million people in the US, and the same in the UK. They've increased their home delivery service in the local pharma, which I believe has had huge uptake, and they weren't so sure. And then their online presence has increased by 39%. So really encouraging from the US section. I know that was badly hit in the peak during March and April, so it was nice to see. Moving on to the international section, we've got obviously Boots, and their sales were down 11.1%. Now we know Boots have huge retail presence, so they're in train stations, they're in high streets, they're pretty much everywhere in the UK. And with the UK lockdown, the footfall is bound to drop. So I'm not surprised. Actually, I think the drop of 11.1% exceeded the board's expectations on this, which just goes to show how much they expected this to impact our business. The one good thing with Boots, and I've noticed this myself because my wife shops there quite a lot, is that their online presence is getting better and better all the time. Their online sales went up a massive 155%, which is exceptional growth. Again, they've completed COVID tests, and they also have a stake in some Chinese pharma store. I don't know how to pronounce this, but I'm going to attempt it. I think it's Gouda or something. But they have a presence now in 7,500 stores, which is 2 times the amount since Walgreens investment. So a little bit stuttery in the UK. I think their focus, and the CEOs come out and said their focus is going to be on rebuilding that and getting that back on pat. But I'm definitely delighted to see their online presence increasing. And as I say, I know this from my wife. She's shopping online there, and when she shops online, she happens to buy more than if she goes into a shop. So hopefully that's a trend that other people kind
You
of.
mean buy more pills when she shops online? Or
No, they do their beauty range. So
okay,
she's I look. My wife loves to buy lipstick, lip gloss, and all our beauty range. So I think this number 7 range, the beauty range, is pretty big for Boots, and that's what she buys. So hopefully not pills anyway, not that I know of. But the last section then is the pharma wholesale, and this has been impressive. It just seems to be a machine ticking over. It increased its sales again, but 6.5% year on year, and the growth has particularly been led by Germany and France. So overall, it's been a really stronger than expected earnings from Walgreens. I suppose looking at their priorities, and it's nice to see them actually lay out what their priorities were. And it's no surprise to see that they're accelerating their digitalization program. So we can see that with their increased online sales. They're launching new products in the UK for their beauty brand number 7, which is probably going to cost me money, but so there we are. They're transforming their retail business, so they're really focusing on reducing their costs. So they're closing stores in the UK and in the US, and I know they're on target to close around 200 stores in each location, and they're pretty close to both. And then they also have this restructuring of global brands. So they're getting really big into this personalization. So you have an app and it's personalized healthcare, and they seem to have a real positive impact in the States. And then the last area they're prioritizing is offering new healthcare offerings. So we've seen this with the Village MD. Now I was a little bit disappointed. I was expecting more of an update on them from Village MD. Certainly, I haven't come across much of it. They did mention it. I know that Phil, regular listener and was on our show, wrote to them and they gave them a nice response, say it isn't their plans and they haven't actually disclosed it publicly yet, but I thought they might give a little bit more information on it. But we know it's in the pipeline, so look, I'm still happy enough. So as I said, overall a strong quarter, strong online sales, conducting COVID tests. I mean, over 2 million tests in both countries is pretty impressive. I mean, depending on how long COVID lasts for, I suppose is going to be is the real decider on these long term, isn't it? I mean, if we come out of this, if a pandemic lasts 1.5 years, like they say, we might come out of this on the back end of next year, and hopefully they reach their targets of 20 to 30% growth next year. I'm not so sure, but I'm still happy with the earnings this month.
So, I mean, it sounds just like a business in trouble, but trying to make the best out of it in that sense. And which business with a large retail presence isn't in trouble, right?
Yeah.
So it sounds like it might actually for Walgreens, if I hear you and if I remember your blog post as well, it might be just actually maybe in the long term a good thing that it happened, because it really triggered them to wake up, really drive online sales, because you had this all the time, this invisible hand of Amazon over the market with PillPack and everything. And it sounds like now that their transformation is really accelerating. So maybe this is just like a great opportunity for them now to get an online business properly up and running. What they're proving now.
Yeah,
Mm.
and I mean, I haven't even mentioned they have partnerships with Adobe and Microsoft. Again, this is in their transformation of their retail stores. So they're bringing in the SAP business and allowing them bring it all up into the cloud to make better decisions. So they're a company that are trying to do the right things now. They were certainly in decline, but they are now coming out of the ice age and into the technology world. So I'm excited. I think they're incredibly undervalued, and I see them more as an opportunity. Yes, there's risk, but I think the upside outweighs the downside for me.
So the only recommendation I have for you, because I know you own the stock and you would like to probably own more, if your wife wants to buy the new number 7, ask her to give you that much money that it pays for it on a yearly basis in dividends. So I don't know if it's 3.5% yield, and I don't know what it costs, $35 such a lipstick, I guess.
Yeah,
So you know how many shares, $1,000, I guess she needs to give you so
yeah,
that you
but
can purchase shares.
the problem with that is she'll ask me for the $1,000 first.
Well, at least you won't complain that you're spending it on investing.
But anyway, that's my outtake on Walgreens. I'd love to hear other people's outtake. I know on some of the Twitter groups, some people weren't as impressed as I was. So I'd love some feedback and just to get involved on it and just let me know your thoughts. But we'll move on to Johnson and Johnson, and I believe you did some digging on these.
Yeah. So I had a look into Johnson Johnson. It's one of those top 10 companies from my portfolio that are tier one. So really like a foundational stock for me. So I try to always pay some additional attention to those stocks. I would say that Johnson Johnson is just literally like clockwork. Also this time, it's amazing how they can do it. Whether there is a crisis like COVID-19 or not, it's clockwork. Yeah, it almost feels like they have like 10 years ago just already printed all earnings reports up front, because they could have done that. It's just continuously the same. So maybe just for the people that love the numbers, they had a total sales of 21.1 billion. Just think about it. It's pretty much 21 billion. They're big. Johnson Johnson is really split up in 3 verticals, and you need to think about it as a holding. It has more than 100 products, brands, but it clusters it in 3 verticals. The first one is consumer health sales, and it made approximately in sales 3.5 billion. Think about Listerine, the mouthwash. That's, for instance, one of their big products in there. And it is approximately 17% of their total sales. But the big vertical there is really pharma, with 11.4 billion in sales. So pharma, when we talk about that, we talk about immunology, oncology, so cancer drugs to fight cancer and such. So the pharma part, you can really see that as a competitor to the big pharma boys out there in the world. And then also medical devices, and I think they were number 2 in the industry when it comes to medical devices, just tracking Medtronic there. And their sales was 6.2 billion and amounts to approximately 29, so a third of their total business in sales. What was really interesting to see is that both Europe and the US were increasing sales by 300 million over the last 3 months. And in LATAM, so Latin America and APAC and Africa, sales was a little bit declining, but also their share to the whole sales in the group is limited. So if you see where Johnson Johnson earns their money, it's really in the US and Europe. That's really their main driver. It also shows I said the possibility they still have to really truly become global, let's say. Um, what is what was really interesting, that if you then talk about pharma, right? So at this 54% of sales, 11.4 billion we said. But if you then just look at immunology and oncology, that's already together almost 7 billions in sales. So this is really where they earn a third of their sales, all in those two branches of their pharma division. And I think it's good to mention, because if you then look at it from where the impact is, it's really there where you need to keep a close eye. And I was really impressed with the drug of Stellara. It is really a strong uptake. 1.9 billion in sales, and it's really to fight Crohn's disease, as an example, but also ulcerative colitis, if I say it properly. And I mean, I know someone with Crohn's disease. I know how painful it is, and such a drug really helps there. So, and there are many people with Crohn's disease. So I think this is still a blockbuster drug that is there to stay for years to come. But they also have a good product, Tremfya, in psoriasis, which is just, I thought, around 200 million, but it's growing quickly. So one of those, it was also nice to see. And then in oncology, again, they have Darzalex and Imbruvica that you need to keep an eye on as investors. And also there, they were doing pretty well again. So, and what is so interesting about this, that the sales is doing so well, has to do with the fact that we, of course, come out of lockdown situations from Q2 in the year. So in Q3, everything started to become a bit better again. What I like about, and maybe this is a little bit about COVID-19, and here's again, and Burswolf had a tweet today about, and he was talking a little bit about like how our management is extrapolating the current situation into the future, right? And you see that really in their guidance as well. So they said Q1, initial impact on COVID. Q2, significant impact. Q3, stabilization. And we have seen that. Q4, recovery. Come on, fuck it. We're all going back into lockdown soon. So don't take Johnson Johnson on their word for Q4. No way this is going to happen like that. I mean, they might take their earnings, but this is just pure bullshit in their earnings numbers. So no way, that's not going to happen. I can't imagine. Anyway, their income statement, and here comes the clockwork, right? 21 billion in sales, but again, literally 66.9% in gross margin, gross profit margin. This is insane. How can they do this, right? Quarter over quarter, or sorry, year over year compared to last year, like COVID-19 didn't even exist. It's for me, this is so unbelievable that the company can be on the digit here. What I can really say is the pharma is keeping the profits up from a profit point of view, income point of view. Medical devices dropped 30% in their income, but pharma really kept up. So we are talking here about earnings of $1.33, and they also report adjusted earnings of $2.20, which will be an uptick of 3.8% compared to last year. Now, why is there this big gap again? They had, I think, it's about 1.4 billion amortization of intangible assets again. So this is typically like there was some delay in some of the trials, so they had to amortize on that. But then they also the opium crisis. We thought that the 4 billion settlement was settled, done around the opium crisis, but they had to put an additional 1 billion in the books, and that really explains the differences. I hope they will also do a clawback on the bonuses. You know my take on this with management here, because they also got the bonuses for their sales of selling all the opium. I hope they also feel it back in their bonuses. But other than that, it's okay. I could live here in this case with the adjusted earnings, knowing it's a pharma company. Yeah. Other news that's probably good to know around Johnson Johnson also from this week was that they were pausing the Janssen trials. There was one person there in the phase 3 trial, I believe, with an adverse event. And if you have a small sample of who you are testing, then you really need to stop a trial there. This doesn't mean that it's stopped and terminated. It means like you need to assess what was really happening with this individual, and was there really a strong correlation between the intake of the drug and their adverse event. So I'm not so worried about that, but we'll have to hear what they have to say. But what I like about it is that it's not driven by politics. Science is still ruling in this, and this makes me really happy. And Johnson Johnson is doing the right thing with that. So all in all, I think they had an excellent quarter for as a company. I'm really impressed by their clockwork again. I consider it a company that I would love to have at a 3% yield, so $135. I'm selling put options on it. One is expiring again, actually expired today, so I earned $50 with that. I just bought it 5 weeks ago. I'm waiting now a little bit for the presidential election to see how that plays out. And after that, I will start selling every month a new put option again and just collect this as dividends from Johnson Johnson until they come to my price. That's it about Johnson Johnson.
Yeah, I'm not surprised, to be honest. As you said, Johnson Johnson, they like clockwork, great company and top tier for everyone. I'm not surprised either with the medical devices segment. It's an area where I work heavily in, so I know quite well. And comparing it to my own company, the figures are quite similar, so I'm not really surprised there. But it's good that the pharma section is so strong, and it doesn't look like it's slowing down. So look, definitely a stock that everybody should probably own, to be honest with you. Like you, I probably wanted a little bit cheaper. I need to get into this options business, to be honest, and puts, but that's another discussion.
Yeah. Cool. So maybe we can go to the next session, listeners' questions.
Yeah, cool.
Yeah. Shall I take the first ones from Phil? He asked, hypothetically, if the current CEO of a company stepped down and you had the choice between the CFO or the CTO to step up as next CEO, who would you choose and why?
I mean, that's easy for me. I'm going to choose the chief technical officer, aren't I? I'm an engineer. We know how to lead companies and innovate. And now, I mean, I don't know. It's a really hard choice. And I mean, your background does play a little bit of a role, but it does depend on the person as well. I don't want to ruin my stock pick later, but in this company, there was a finance guy came up. Actually, two finance guys came up, and it's really needed because they need to cut back on R&D spending, and these guys know how to like balance the books and so to speak. So I suppose from an innovation point of view, I'd probably go CTO. But if you're looking to balance books or from a financial point of view, I mean, the CFO is the honest answer, but depends on the person, doesn't it?
I would always choose a CTO and have the CFO still there as a CFO, making sure that the books are not cooked. But that if the CFO is already a good bookkeeper, why not keep letting him do the best job in the world? I mean, I've seen Peter Voser at the time before Ben van der Burde at Shell. I mean, yeah. And I've seen this more often. CFOs, I think, are good. Maybe sometimes when, you know, my issue is all the time when I see CFO as a CEO, I see them that the numbers are pretty well initially, but then you don't see really product growth anymore, yeah, or portfolio growth. And I rather see a CTO working on the portfolio and a CFO keeping them honest with the money.
Yeah.
So I would probably always have a bias towards the CTO, positive bias.
Yeah, but we're two tech guys, so we're always going to be biased. Let's be honest, finance guys, well, where I work, are a bit of a pain. So
yes, they are. Yeah.
So we'll always go with the techies.
Yeah, true. Okay, next question then. Danny, any thoughts on space stocks such as Momentus that's meant to IPO start of 2021?
Honestly, they haven't been much on my radar. The only thing I know about space is my son wants to be an astronaut, and he knows way more than I do about space. So I don't know. It's not on my radar. I don't think space is on anyone's radar at the moment. So it's not something I have much interest in.
Yeah, I only know the only space I know is space cake. Also, not too interested in that. Having said that, I like Virgin Galactic really a lot. I could have something like Virgin Galactic in my Mad Money portfolio, this 10% that I allocate there. And why Virgin Galactic? I think that space tourism might be something that I believe that Disney should buy Virgin Galactic as an example, and just put the whole Disney brand on top of it and create this Disney experience going into space. And I think this is a business that could be really interesting if they can really commercialize that it becomes as expensive as a plane ticket. Wow, I would do it. Yeah, and this is what I see with Virgin Galactic. SpaceX, yeah, if they can get a proper business model out of it, definitely. But Momentous, I have no clue what it even is. So, no, sorry, Danny.
Cool. The next question then is from Dividend Newbie, who asks us, how long does it normally take to do a thorough analysis before you feel ready to invest?
Wow. That really depends. There are companies that I'm quite familiar with, and then it goes more easier. But I would not advise Dividend Newbie to start reading an annual report of one of those companies, because 200 pages on A4, I mean, and you don't need that, right? But I would say typically give yourself a few weeks to analyze it, and you don't need to do everything on one day. Read the news a little bit around it, read some of the statements, try some of their products if you can, depending on the company that it is. But take a few weeks for it. Really get familiar with the products that they sell, their main products. And of course, for pharma company, you don't want to take their oncology drugs, but still try to get a feeling for the company. I think that's the most important. Besides going into the numbers and this, go to the online shops. If you like Nike, check their shoes. Ask your kids about how they like the new Nikes and such. I mean, this is for me an important part of analysis, to just start to live try to live the brand of it.
Yeah, good advice. I mean, as you said, it depends on how well you know the company, and if you are just looking into the figures and you want to analyze from that perspective, it can take, I don't know, for me it could take maybe a couple of weeks to go through. So if you want to go through,
Yeah.
as you said, an annual report is 200-300 pages long, and you do want to read the bulk of it, just to understand that annual report, and then you need to understand the company's mode, what they do, how they make money. So there's a good bit of work and time that can go into understanding a business. As we kind of said last week, don't get too bogged down on the finer details.
Mhm.
You can learn a little bit as you go along. Just don't invest a huge amount of cash. Put a little bit in the game, get to know the company, and over time you'll build up knowledge. Rome
And the nice
wasn't built
thing
in a
is,
day.
yeah, and the nice thing is, once you have analyzed such a company, and you look after your brains a little bit, let's say, then this knowledge will stay. So, for instance, I still remember many facts from companies that I analyzed 3-4 years ago, and I still benefit from that knowledge. Cool. Dividend Wave also had a question for us. One growth stock you have on the watch list or have bought, and why?
So there is one company on my watch list called C Limited, so ticker SE. So they're a global internet company who have pretty much created their own digital ecosystem, a bit like Apple, if you get me. They're in 3 different businesses. So they're in games and digital entertainment, which is massive potential. They have this Shopee e-commerce, which it seems to be popping up everywhere that I'm looking at. It seems to be just growing and growing. It's relatively new. I think it's 4 or 5 years old, but it seems to be growing exponentially. And then they've got this digital wallet. I think it's called Sea Monkey. It used to be called AirPay, and you can integrate that then with the other two options. I mean, it is such a big a big, like they have a wide range of things that they do, and I've only touched on three of them. I recommend just reading them. I know Investment Talk had a tweet, a very in-depth tweet about them, and Christopher Seifel, I think from Seifel Capital, has a really, really in-depth summary on them, and I'll put a link below just to check them out. I haven't bought any yet. I still struggle with growth stocks. I know this, but this is definitely one that if I was to get involved, my problem with them is that I look at their price in January and look at the price now, and it's grown like 300%. And in my head, have I missed the boat? Even though I know there's way more room to grow, I just can't get out of that mindset. So they're definitely one that I'm watching. If they take a dip, if they come down a bit more, maybe I get involved. But I'm still reading on them, and to answer Dividend Newbie's question, how long is that taking? I'm looking at these the last 3 or 4 weeks, and I'm only starting to get to know them, and it's probably going to take me a little bit longer. So that's who I would recommend checking out. Have you got anyone?
No, not in particular. I just mentioned Virgin Galactic. I think it's around $21, but no, it's for me to. If I would consider it, I did one time a back of the napkin analysis. I would probably look rather at $10 or $11. But there you go again. Yeah, so would need to drop 50%. So no, nothing in particular. I would. So really, I think growth stocks. If there's one company, I hope that Google has poor earnings, for instance, due to lack of advertising income. I will be a buyer again to buy some additional Google, because Google, I like as a company. I still think there's a lot of potential for growth. So on a down day, I might maybe do that. But yeah.
Cool. Then the last question we have from Rep Stones is: are you buying BP at this level?
No.
Yeah, it's I'm not either. I've enough exposure with Royal Dutch Shell. I'm not looking to get into anyone else in that section or that sector at the moment. So I'm not buying. I believe they're at a good price, and they stack up quite well. But I'm not as familiar with them, and to be honest, I'm happy. I'm happy with Royal Dutch Shell at the moment. So I'm not buying them, but I can see the attraction.
Yeah, same here.
Cool.
Good. So let's go to the thanks, by the way, everyone, for asking these questions. And as you know, we always enjoy answering them. I hope also that you found our answers valuable and that they help you a little bit in your own research or decisions that you would like to make. Having said that, stock picks of the week. Do you have one?
Yeah. So again, like last week, it's not really a recommendation to buy. It's a company that I'm in the middle of writing a blog post for. So I'm in the middle of researching them, and it's Intel. I kind of alluded to them on Twitter during the week that I feel like they're undervalued, and that's just from running basic dividend discount models and dividend cash flow models. And from a valuation point of view, they certainly look on the cheap side, and that's what kind of intrigued my interest in them, and just doing some interest on them. I know they've had some struggles with the 7 nanometer chip, and it's been delayed, but they are a company that's in transition. They're moving from a more PC centric to a data centric business, which presents challenges, no doubt. But I do like some of the acquisitions that they make. I've mentioned to you before we started the show, like I'm really happy with Mobileye. I know they overpaid for it, but in this low interest environment, you can afford to overpay a small bit, and you can make it up quite easily. And they've also acquired a company in the programmable logic device maker, Altair, I think they're called, which again I think was a very shrewd acquisition. So they're making some good moves. They are in transition, and I think the stock price is fair, and the drop was justified. But I still think they are on the cheap side, and as a long term prospect, looking at their cash flows and dividend and payout ratios, all points in the direction of buying them. I'm not at a decision making step yet, so I'm still in the middle of researching them. But I should have that blog post out after the earnings next Thursday, and I'll have a decision by then.
Nice, interesting. I'm really looking forward for your blog post. I remember I enjoyed very much also your Royal Dutch Shell one, Walgreens. So looking forward.
Thank you. So moving on to you, what's your stock pick for the week?
So I've not particularly as you like a stock pick this time, but I just wanted to mention that I bought some realty income this week. Not my normal monthly purchase amount, but I had a feeling like, okay, there are so many stocks, but I actually don't want to buy before the earnings. I typically want to wait until after earnings. And this is interesting, right? Because you don't know if it goes up or down afterwards. But I rather have a confirmation that earnings were well and then pay a little bit more than suddenly get surprised with negative earnings. And if I can wait a week, I wait a week. However, I also want to keep consistent with buying stocks. And for me, realty income, I felt like, okay, around $60, that's a fair value kind of place. So I just bought few. Again, here this means do your own homework, because with realty income there is something, of course, retail space that they rent, so it's really about rent collection. But I feel pretty comfortable with this stock, and that will be my stock pick of the week.
Very good. And don't forget, we have the presidential election in 18 or so days. So this is right in the middle or right after earnings. So expect some volatility.
Oh yeah, I mean, I think it's the first Tuesday of November, right? 3rd of November.
Yeah.
So we shouldn't have a dividend day, but just like we should do a US election day and just sit in popcorn, and then the day after watch the markets respond. Just I think this will be one of those days with with this election there. It will be firework, like guaranteed. So it will be CNN on, popcorn, watching.
Yeah, I'll be in Italy at that stage, so I can't actually enjoy it. But I think you should do that. That would be fun.
Provided you are allowed to go to Italy.
Yeah, well, as it stands, I am.
Okay, this brings us to the end of the show. Thanks, EMF again. Like always, a pleasure. Thanks also to all the listeners, and also for the ones that brought in the questions. It's really great to have your engagement. And yeah, let us know whether you're interested to join us on Dividend Day, upcoming Thursday, 10:30 p.m. Central Europe time, 9:30 p.m. Ireland.
Hashtag dividend day. Let's get it trending.
Okay, guys. Have a good day. Cheers.
See you. Bye bye.